Hello value investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Peloton. So we're going to go about what's good about Peloton, how investors are thinking about Peloton right now. It's got its upcoming earnings in a couple of weeks, so we're going to discuss that, and obviously we're going to talk about its valuation. So I'm just going to get right in, right? So here's quite interesting, right? This is a dynamic. If you kind of follow my work for a while, I've been mentioning this for some time. Not only has the whole COVID trade kind of just dissipated, what we're seeing is that the market has been really undiscerning, okay? So obviously Peloton has very little to do with, let's say, Zoom or Chewy or even, telehealth company Teladoc. So it doesn't really matter too much to the market right now how these businesses are going to perform over the next 3 years. The market doesn't care. Sees this as one as the same, very much participating in the same type of dynamics, and the market is being very much undiscerning and just selling off these positions. And I maintain that if you're willing to do a bit more work, you can outperform the market if you just kind of peel away and be a bit selective here. Okay, so last month when I was following Peloton, I said, okay, so Peloton, there are some positive and negative attributes here, but paying 6 times forward sales doesn't seem to me strikingly cheap. And in the past month, the stock is down 23%. And what is quite interesting here, it's not displayed in the graph here, but what's quite interesting to me, if you've been following my work for some time, is that I've been making this case that since about July, the market has been really trying to pick out the best opportunities. So by the best opportunities, like the highest quality businesses, the businesses are going to be around for the next decade, pretty much irrespective of their underlying valuations. It's kind of interesting. I've not seen this dynamic before. It certainly feels very, very new, that it doesn't matter too much about the valuation. It's just the highest quality business with the strongest growth rates. That's it. We'll pay up. Everything else, the market is just kind of dumping. And this is quite interesting, and I think that I just wanted to put out there. One thing that I wanted to highlight is that you can see the guidance. So on the at the right end of the graph, you can see that they're guiding for close to 35% year-over-year growth rates for the year as a whole. Now, that's the positive news. The negative news is that Peloton's growth rates are all over the place. You can look at the graph here. You can see Q1 21, they were up 232%. Okay, so it was up very, very strongly in that Q1 21, and then over time, over the next 12 months, it was only up 54% year over year for Q4. So you see a dramatic deceleration in growth rates, and that's part of the problem. Investors are kind of like, okay, what is the company growing at? If you kind of give me some kind of understanding of that, then people will reprice it higher, and it's difficult. I can see why the market is selling off here. The other thing that I wanted to highlight is that Peloton has 2 main aspects, okay? But what's particularly attractive is the subscription business. The subscription business amounts to 30% of total revenues as of Q4 21, okay? So their fiscal year is kind of misaligned. They're going into the next several weeks. They're going to report Q1 22. The other thing that I wanted to highlight is that the subscription business is growing at a really rapid rate. It's up 132% for Q4, okay? So it's growing really, really fast. And even if over the next 12 months it decelerates and it only grows at approximately, let's say, 70%, it's not difficult to see that from this point, if you go forward a year, by this time next year, approximately 45% of Peloton's business is going to be subscription based. And think about this, right? So we're now in October, and you think that in October 22, over the next 6 months, investors are going to be thinking to themselves, half of the business is going to come from subscription. So at that point in time, it's a very different dynamic. You're going to go from a business that's kind of like the bulk of it being a product to the bulk of it being a subscription business. And that's going to be quite attractive. Remember, I wanted to highlight another thing. So if you look back, so you're looking back to Q4 20, so you're looking back in time, you see on the right side of the graph, 24% of Peloton's gross profits were coming from subscription, okay? So the bulk was hardware, and you had this kind of subscription business attached. Right now, 70% of its underlying gross profits come from subscription. And if you fast forward that, you can see that it becomes increasingly driven by how the subscription business goes. So investors would have to be a little bit patient for that to unfold, and that's something that I wanted to highlight. The other thing that I wanted to say, okay, is that investors are asked to pay about 5 times forward sales, and it's difficult to get really bullish here. Paying 5 times forward sale for a business that has kind of approximately 27% gross profit margins. It's not a high margin business right now. That being said, as I've been already describing, as the subscription business grows, that's going to dramatically improve the gross margin profile for Peloton. So starting already when they report in the next few weeks, Q1 22, approximately 33% gross profit margins that they're guiding for. So if you think about it, it shows that as the business becomes more and more subscription based, that gross profit margin continues to go higher, but investors will want to see that taking place. It's one thing to come out of a spreadsheet and say this is what is going to happen, another thing for you to see concrete results, and that's why investors are not willing to pay 5 times forward sales. But just to be clear, I get the argument, right? If you think of this is like a Peter Lynch trade, right? So you're thinking about it, it makes sense, right? It's a business that you know, everyone's familiar with it, you probably have it in your house, it makes sense, right? But ultimately, you want to see the business have a very strong concrete plan to reach profitability, and that's you're not seeing right now. So that's why I'm not investing here. If you want to find out what type of stocks I am investing in, don't forget to check out my marketplace called Deep Value Returns, and I help you become a better investor. I give you high quality, actionable investment insights that you can think through and helping you see the different dynamics of the investment thesis. So with that aside, hope to see you guys next time. Okay, bye bye.